I do want to turn now and talk earnings with you quickly before we wrap up. In our Twitter Spaces with Chris Versace, you said, Sarge, that when looking at big tech as a long-term investor, you actually see room for future growth in the space. After last night's disappointing results from Apple, Amazon, and Alphabet, disappointing either on missed estimates or forecasts, one reason or another, things not a great picture after hours for those three names. But I wonder, has your outlook for tech changed since the close of the bell yesterday?
Since the close of the bell yesterday, I think my opinion that Apple is the prize crown of those three names. I think that's been reinforced. Apple's problem was as much one of demand as anything else, where the other two do have really profound issues within their business models. Google's under pressure from the ad side, from YouTube. Amazon, although it's a great company, without that rapid growth that were achieving all along in AWS, that was their margin driver. Now they're going to have to run a business. It's a little tough to show growing earnings. They might get some minor growth in revenues, but growing earnings are going to be tough for Amazon from here. Those two names might have to evolve into cash flow type names that provide a dividend, which they have never done, or at least I don't remember them ever doing. So they might have to evolve their model. Apple, on the other hand, I think Cook's being smart. He's moving a lot of the operations into India. He's diversifying that. It took him a while, but he's getting it done. Services still a new record. Installed base a new record. There are things to like within the Apple report. So I'm not saying Apple isn't expensive, because it is at this valuation. But I did hang on to it. I shorted Google last night going into that earnings report, because I did not trust those numbers, and I didn't see the windfall I was hoping for on that short, but it did turn a profit. But Apple, I stayed long throughout, and I am long. Where's Apple right now? It's actually up a buck and change right now. So I don't love Apple. It's not one of my favorite names, but I think Apple, if you're going to be long and run a net long portfolio, yeah, you probably have to have some Apple in it. As for tech, the larger picture, I think high-end semiconductors is where I want to be right now. That's why I'm in NVIDIA. That's why I'm in AMD. Those, to me, are the elite, the creme de la creme of the semiconductor space right now. The rest of the space is dangerous. So I don't think you want to be everywhere. Memory is a disaster for now. But I'm never, ever going to bet against Lisa Su or Jensen Huang.
Real quick follow-up on Apple. You've previously mentioned some balance sheet concerns. Are those concerns still there?
Yeah, it's not like they can't run their balance sheet. Okay, they have as of this current quarter just reported, they have a current ratio of about 0.94. I like to see a full 1.0. They have a quick ratio of 0.88 when you sans the inventory. So that's pretty much okay. I've noticed that while they have long-term debt of 111 billion, or that's short-term and long-term, but most of it's long-term, about 111 billion. The net cash balance is about 50 something billion between actual cash and short-term marketable securities. They have about $114 billion worth of long-term marketable securities on their balance sheet that they don't count as current assets. So I guess there must be in more illiquid type securities or something like that. If more of those were in the current column, I would feel a lot better about this balance sheet. But it's not like they can't meet their obligations. It's not like they can't pay their bills. It's not like they can't buy back stock and pay their shareholders. I would just like to see this balance sheet restructured a little differently.